Hello and welcome to Moneyline. This is Matt McCall. We have a special election playbook for you here today. Well, you all know one of the most contentious elections in modern history is tomorrow. I'm going to tell you what you need to know, what you need to watch, what your plan should be with your investments. This is all coming up because this is a can't miss episode right now. We all need to be seeing this. We all have something on the line right now on Moneyline.
The buck starts here. Moneyline with Matt McCall.
All right, again, thanks so much for joining me. I'm Matt McCall. This is Moneyline. It is November 2nd, 2020. It is Monday. It is less than 24 hours before Election Day, November 3rd, 2020. Man, oh man, Trump versus Biden. It's like that big heavyweight battle. And you know, it's kind of ironic that I'm doing this because, you know, typically I do things that really people want to hear about. But I'm not doing this because I want you to hear about this election playbook and tell you what to do. It's almost I'm telling you, for the most part, to ignore a lot of the other stuff you're seeing. But we have it all set up here. A few things before we get started. I'm going to cover what we need to watch, what the potential outcomes can be, what my plan is right now. Doesn't mean to be your plan, but what my plan is right now. We'll take a look back, and then we'll talk about a couple trends that I think are very important to mention heading into tomorrow's election. A couple notes to know here. Comment down below if you have any questions on what I'm about to talk about here with the election playbook. It's going to be a little bit shorter, maybe 15 minutes today. I want to get to the point. I have a lot of work to do. As you can see, I don't wear this sweatshirt every day. It is freaking freezing. If you looked outside right now, it is so windy. My hands were frozen on my scooter, so I can't get rid of this chill. So I still have like one of my 18 layers on. But comment below if you have any comments on anything I'm about to talk about today. Also, keep in mind, if you don't follow me yet on Twitter, it's at Matthew McCall, 2 T's. And tomorrow I'll be tweeting all throughout the day as things come in with the election. I'll be tweeting tomorrow night, most likely with a scotch just to get through this. I don't know what it's going to be. We may know election results very early because of early votes. We may not know for weeks. So I'm going to talk about all that, but make sure that you tune in to my Twitter. We can have discussions going on. I'll be there live throughout the evening just to keep everybody up to breast of what's going on as far as the markets are concerned with the election. All right. So our election playbook 2020. Really, we've done everything we could have done already. I sent a note out to clients of Penn Financial Group this weekend, and I let them know what our strategy was. I bought for myself last week. I bought for clients of Penn Financial Group last week. We put out buy alerts for investment opportunities, our newsletter, last week. So we did some buying last week, and the market is up today. Right now, though, Dow's up about 430 points, S&P's up about 40, NASDAQ's only up 32. The tech stocks are lagging. So if you look at percentage gain, the Dow's up about 1.6%, and this is about 12:30. It's 12:34 East Coast time right now. S&P's up about 1.25%. NASDAQ's only up 0.3%. So the tech stocks are again lagging. They gapped up and they're lagging. The small cap stocks, which is pretty interesting, the Russell 2000's up 1.7%. So of the four major averages right now, small caps are outperforming. Very, very interesting to see that with the big tech stocks falling. So I'm not quite sure what that means yet, but there's something behind that. All right, so what I said in the note basically, and I'm not going to tell you the whole note or read it to you because that's what the clients get, but we have been planning for this. We knew the election was coming. We had a good idea that the week before the election was going to be wild. I have a good feeling the weekend of the election this week will be wild. And the plan all along was to buy into weakness. We had the S&P last week down 5.6%. We bought into weakness in the stocks that I believe are a great long-term plays. And as I always say, I don't know when I buy into weakness if the 10% pullback's the bottom or it's 15 or it's 20. We try to get a sweet spot. We try to buy into weakness for long-term gains. So we've done that. Our plan right now, and I'm not saying this has to be your plan, but I think this is the best plan going forward, is to, in short, sit on your hands because you don't want to try and be a hero. I think it's gambling right now. And I equate this similar to an earnings release, which happens every 4 times, once a quarter for companies. When earnings are coming out, say earnings are coming out tomorrow for XYZ stock. Number one, I don't know what they're going to be unless I have inside information, which I don't. I don't know what the earnings are going to be. If they're going to beat, meet or miss. That's number one, gambling. Number two, you don't know the reaction of the stock. Many times they may beat on revenue and earnings per share, but the stock's down for some reason. Maybe they guided lower, and vice versa. It is such a gamble. And if people say they know how to trade earnings, they're so full of it because you don't know. There's no rhyme or reason. Trust me, I've looked into it. I've tried to find patterns in everything in life. And in earnings, there is no patterns. There are no patterns after the fact there is, but not before. So same thing here with the election. We don't know who wins. There's really three possible outcomes, in my opinion. We don't know which of the three outcomes it will be. And more importantly, we don't know what the reaction of the market's going to be. I remember 4 years ago sitting in Nashville up all night watching it. It was odds on Hillary's going to win. I mean, people come out now and say, I told you Trump was going to win. Well, you were definitely in a minority if that was you. And congratulations if you picked it. But majority of people thought Hillary's going to win. The polls showed Hillary's going to win. And when it started looking like Trump was going to win, I remember the Dow falling over 1,000 points that night and looking down like, oh, son of a gun, not this. And then we remember the Dow closed up several hundred points. So nobody knows what the reaction is going to be, let alone the winner. So let's talk about that. Let's talk about some potential outcomes. One could be Trump with a divided Congress, which we have now. Could be Biden with a divided Congress. Or it could be what they call blue wave. Biden and Democrats take the House and the Senate. So I don't know which one's going to happen. I'm not even going to guess because I don't know what's going to happen. But let's take a look at some of the situations that could happen. And the one that I think scares people the most, because a lot of people that lean right or moderate don't want to see just every one party take over everything because they like to have the checks and the balances. So one scenario that a lot of people think is going to happen, but also scares a lot of people, is what we call a blue wave. Biden wins, Democrats take the House and the Senate. I will tell you this, regardless of your political views. I mean, please, for when it comes to this, please put your political views aside for the next 10 minutes because this is all about, I'm talking about the market. I'm not talking political views at all. I'm giving you scenarios what I think could happen, not what I want to happen, what could happen. So if you have a blue wave, it's very similar to 08, 09. In 08, Obama won and there was a blue wave. We were coming out of the recession in 09. We ended up bottoming in March of 09 in the stock market. And, Obama talked about raising taxes. Keep in mind, he didn't raise taxes until 2013, 4 years later. Do you know why? Because we were coming out of recession. He was too damn scared to do it. We had unemployment too high, too damn scared to do that, and didn't want to ruin the recovery. Because even if he came out and rose taxes like he said he was going to do and make his party happy, his party wouldn't be happy if they don't have jobs. If the economy goes back into a double-dip recession. I see the same thing happen if there's a blue wave again. You may see a couple taxes being raised, but nothing significant because if that happens, it flies in the face of all the stimulus going out there. Even if they say they're going to raise taxes on the wealthy, it may be the ultra wealthy. They may raise corporate taxes a little bit. I just don't see it happening because it's too damaging potentially to a recovery from a recession and too damaging to what we need to have as far as more jobs being created. It kind of flies right in the face of the $2.2 trillion stimulus the Dems are talking about. So I see it being pushed back. I really do. And it's a very easy case for them to make and saying, hey, we don't want to mess with this recovery we're seeing right now. Then they could take a victory lap and say, hey, we were the ones who created this recovery, just like Obama did in 09 to 2013, then raise taxes. I see a very similar situation. If that is the outcome, that is great for stocks. You may not like who wins, but it's great for stocks. I can tell you, I wasn't a fan of Obama at all when he got elected. And that may be given away my political party, but I'm really I walked the middle more than anybody. But I had something about him, I didn't like him. And I remember being on Fox that day saying, he's going to go down as one of the worst presidents in history of the United States. I might have been wrong saying that. Who knows what the hell happens 50 years from now, because you can't tell till down the road. But I will say that this. I stayed in the stock market, and I'm glad I did. Because we were coming in a recession. It didn't matter to me who the president was. The country was going to rebound, and it did. So, and I see something very similar happening now. So that's one. If Trump wins a divided Congress, we kind of know what's going to happen because it's going to be a lot of the same that we've seen before. Biden divided Congress. That is the one that probably is the worst case scenario, to be honest with you. And I think because we're not going to see a stimulus come through because Biden wants a big one. The Republicans don't, kind of what we have right now, and we won't get a big one through, but we may see taxes raised. So that might be the worst case scenario, believe it or not. Again, there's a lot of speculation going on here. And just so you know, on Wednesday, I'm going to do an update for all subscribers on the election results. Hopefully we have a winner then. And I will tell you exactly what I think, what is going to affect the market, all that kind of stuff. A detailed recap of the market, not the election, but of the market itself. Okay. So those are the potential outcomes. This is kind of fascinating. Since 1984, the market has picked the winner 100% of the time. If the market's up from the end of July through the end of October, the incumbent wins or that party wins. If not, the challenger wins. Well, so let's take a look what the S&P did from the end of July through the end of October. August, September, October is 3 months. If this isn't 2020 to a freaking T, I don't know what is. The S&P 500 is down 1 point, 0.04%. 0.04%. It's basically unchanged. Dow's up 0.28%, NASDAQ up 1.55%. So, I mean, this is so 2020 to me because you think about it, it's basically the S&P is unchanged. So it doesn't help us there. I mean, it's unbelievable. It was up big, but we had a sell-off in the last little bit here. Last week's sell-off really put the nail in the coffin. It's unbelievable just how this year is coming out. So that doesn't tell us shit, really. Again, we talked about the outcomes that could come up. A couple of things to watch, in my opinion. Contested election, if there's no clear winner, that's not going to be good for the market, in my opinion. The VIX, the CBOE Volatility Index, which measures fear in the market, has already spiked 90% from the August low. Maybe they're saying we're going to have a contested election. Also, things to watch are swing states. That's where you're going to see a couple of swing states are going to determine this election, like they do a lot of elections. Mail-in ballots counted early. A lot of them may be contested. We have some states in Pennsylvania where they're not allowed to be counted early. You won't really know the outcome of that until a little bit later. And being close, who the hell knows? We could have another situation in Florida where if the swing state's within 0.5%, there could be a recount. We could have one or more contested states like that are swing states that really, oh my goodness. I mean, it's crazy. If we look back on past contested elections, obviously the big one that we know about is 2000, Bush versus Gore. Took over a month to settle. Gore finally conceded 5 weeks afterwards. The S&P fell by 1.6% the day after the election. The month of November, the S&P was down 8%. That was the worst month of that year. Bonds, of course, went up. So we could see something similar to that. I don't know. Going back to 1876, obviously things were a little bit different back then. That was New York Governor Samuel J. Tilden went against Rutherford B. Hayes, who was the governor of Ohio at the time. Tilden was actually up 184 to 164, but there's 20 electoral votes out there, and they went to Hayes, and then they didn't really figure this out until March. But at that time, that's when the inauguration was. It was figured out a couple of days before the inauguration, which is crazy. Market was down during that time, but we were also, the country was in the middle of what they called the Long Depression from 1873 to 1879. So kind of tough to kind of give that any sway. And then you go back to 1824, four-way split there. Not likely to happen now. So really no precedent other than 2000 in anything in modern history for this to happen. So yeah, we're in uncharted territories, but this year's been uncharted territories. And you throw in COVID, and holy smokes, you got a hell of a storyline coming up here, folks. And that's why don't be a hero. Let the market dictate to you what to do. If the market rallies after this happens and we want to get some money back in the market, it's not going straight up. Number one, you'll see some pullbacks along the way. Number two, I'd rather pay up for a quality company than buy and see something crazy happen where a market overall goes down. It takes down every stock. So I think the reward to risk ratio we have to weigh out in front of us right now is to be patient. Patience is a virtue when it comes to the stock market. I have absolutely zero in real life, but it is an absolute virtue right now. I will say driving my scooter to work today was so damn cold. My hands were frozen, and I had no patience for some of these red lights. I looked around, and zipped right through it. So, but I'm not the only one in Baltimore who does that. Trust me. The worst drivers in the world are here. But I try to follow the rules when I can. And really just want to end on something that's really important is, as I mentioned, we've been planning for this for a long time. And as important it is who the president is, the president really isn't going to stop or change majority of the trends that we're invested in. Electric vehicles can continue to expand. China just came out today and reiterated basically saying their EVs are going to continue to expand, going from 5% or so of the vehicles on the road that are being sold right now to 20% next 5 years. That's 4x in 5 years. Huge, huge upside. NIO, Lee Motors, XPeng, all up big today. NIO had numbers, XPeng had numbers, very strong monthly sales. That's going to continue. Tesla's got a big presence in China, but EVs around the world, that's not going to stop. Urban mobility is not going to stop. Battery technology can continue to move forward. Energy storage will continue to move forward. Will not stop depending on who the president is. 5G, do you think that the rollout of 5G relies on the president? No, it does not. Internet of Things? No. Augmented reality, virtual reality? Absolutely not. Biotech and drug discovery? No, we're moving forward. That what we're seeing right now is amazing how quickly we're coming up with a vaccine. I know I wish it was here yesterday, but it's not. We're working very hard on it. That's important. Telemedicine, look at the strides we made. That's not going to slow down anytime soon. Digital health, wearables, clean energy, solar, wind, all this stuff will be moved along. Will it be accelerated, potentially some of these sectors because of who wins? Even more so, yes. But the bottom line is we've been setting up for the next 4 years, the last couple of years, folks, with the portfolios we've been putting together. Will there be ups and downs from day to day, week to week, month to month, quarter to quarter? Absolutely. But all this does is create better opportunities for us to buy in weakness. So keep that in mind. We have been preparing for this for a long time. Our subscribers, my own portfolio, my clients at Penn Financial Group. And we have a plan going forward. But the plan is in trying to pick the winner, trying to pick which sector is going to go. We listen to the market. If you listen, the market talks to you. And that is what we'll do. We're not trying to be heroes. What we do here, and my philosophy to making money in the stock market and being a successful long-term investor is simple. It is truly simple. But it's not easy because you have to sit on your hands right now. I use this analogy all the time. Losing weight, getting in shape is simple. You eat better and you work out. It's simple. It's not hard. Is it easy? No. My workout class at 6 a.m. today when my alarm went off at 5, was that easy? Hell no. But it's simple. I know if I went there, it'd be better for my body. It'd be better for everything going on. I feel better today for doing it. But shit, it wasn't easy. But it's simple. Same thing with the stock market. Invest in solid, long-term trends that the odds of them going up are virtually guaranteed, but nothing in life's guaranteed. And then pick the top companies in there. And that's what we're doing. And that's how we're crushing the market. And that's what we're going to continue to do. So stick with us. Check it out. Again, tomorrow, follow me on Twitter. I'll be live tweeting throughout the election day at Matthew McCall. Go to investorplace.com/moneywire for all our free articles. We're going to put a lot of articles out there in the next couple of weeks based on this. And if you want to sign up for investment opportunities where we're going to give clients or subscribers an update, we'll be doing that on Wednesday. $99 a year for a monthly. And you get tons of information. All right, folks, get out there and vote. Support who you want to support. Be friendly to everybody. Don't let this get you all worked up. It's out of your control. Place your vote and just go with it. Let's become a better country regardless who wins after this. All right, thank you so much for watching. Smile. It's almost over, the election day. I'm Matt McCall, and that's been your Moneyline.
Moneyline with Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.